Okay, everybody, so Tesla had their quarterly earnings call yesterday for their fourth quarter 2025 and full year 2025. And they shared a lot of numbers, as they usually do. They're a public company, so they have to give you all kinds of numbers about how they're performing. But I really want to focus on the bigger picture, because now it's become very clear that Tesla is taking a whole different approach in how they're building their company, not just for 2026, but beyond. It fits perfectly in this AI story. Honestly, they're probably one of the biggest pillars of this AI revolution that's happening all over the world for the next 10 years. Of course, NVIDIA is one of the biggest stories there. You got your ChatGPTs, your OpenAIs, you got your Anthropics. But Tesla is one of those that I don't think very many people are talking about. And I'm going to walk you through why I think that is based on everything that they said on the quarterly earnings call. And you can actually see this in the numbers. So in one of the slides in their quarterly earnings report, there is a sort of slide where they show how many cars they're selling per quarter, how big their fleet size is, how many cars there are. But they've added a new number in there, which is the number of FSD subscriptions, which is right now is at 1.1 million. The reason why that's such a huge deal and why I think it's a big signal for not just the stock market, but for people in general, is that Tesla is now giving people numbers into their AI business. Before, Tesla would just report on their cars. We sold 450,000 cars this year or this quarter, and we produced 480,000 cars this quarter. And it was just about the cars. They had the Model 3, the Model Y, the S and the X, and the Cybertruck. But now they're telling you, oh, and by the way, out of the, I think, 8.9 million cars we have in the fleet, 1.1 million of them have FSD. So what that's going to allow the market to do is to take that number and start figuring out, okay, how much money could Tesla make as the quarters go along on their AI business? The reason why I call it the AI business is because full self-driving FSD, this self-driving suite software that Tesla uses for their cars to drive themselves, I'm sure you've seen tons of videos, especially if you follow this channel, is that entire system is AI-based. It's an end-to-end neural network. It just uses the cameras around the car and an AI chip in the car to drive the car. And then the person doesn't have to do anything from parking spot to parking spot. The car just drives you. We even have videos now of people going coast to coast in the United States, from California to New York. So Tesla very clearly is saying, yo, guess what? Boom. You can now call us an AI company because we're showing you how much AI business we're doing, right? Now, if we do the math, that 1.1 million units, Tesla says roughly 300,000 of them are in the monthly subscription. The other ones, they've just paid the full price, so either the $8,000 up front or whatever. But if we just assume that the full value of the FSD subscriptions that people paid up front, if you just assume that those are being collected monthly, and we apply the $99 per month fee that Tesla has right now for FSD, it's roughly $100 million per month, or $1.2 billion per year. So that's how much Tesla is making on self-driving revenue. And what's interesting there is that there's zero cost applied to it. So it's $100 million of revenue, but zero cost. And the reason why is because for them to give you that software, they just have to turn on a switch. You just flip the switch, your car can now drive itself. All the costs have already been put into the car. So when Tesla has been selling their cars over the last few quarters, when you pay $40,000 or $50,000 or whatever for a Tesla, the cost of building that car already has the AI stuff in it. For these last few years, like 8 years, Tesla has been basically putting in $2,500 or more worth of cost into these vehicles, with the idea that by now they would start charging money on that cost. And so as more and more cars get added to the fleet, Tesla's going to be able to collect additional FSD revenue for zero cost at essentially 100% margin. And it's recurring. It happens every month. And so if you think about the current fleet of about 9 million cars, there's about 12% of the total cars in the entire fleet have FSD, so they're collecting some sort of revenue. But then if you fast forward to, say, 2030, and you think about the projections that Tesla has for how many cars they want to sell, their fleet's going to be around 25 million cars at least. And so if you assume by then this software is going to be just unbelievably useful, and there's no reason why it can't be there. This whole thesis is what's making the company have the valuation it has, which is close to $1.5 trillion valuation, making it by far the biggest car maker in the world. So the market expects them to do this. If you have 25 million cars and say roughly 80% of that fleet has that subscription, and Tesla, you assume they keep it at $99 per month, which they probably won't, because as the car drives itself and you don't have to pay attention, the utility of the car skyrockets because now you can, work in the car or whatever. Tesla's going to be able to make at least $2 billion per month on just FSD. So roughly $24 billion per year on just FSD, and that's pure profit. And to put that in perspective, Tesla will be making more on just FSD subscriptions in 2030 per year. It would be 5 times more than how much they've made last year in 2025. So they will make 5 times more. Let me just say that very clearly. They will make 5 times more in 2030 just from FSD subscriptions than they would on the entire business in 2025. That's why this is such a big deal. And to be very clear, this whole video, nothing is investment or financial advice. I just want to inform the people that are following this story. Okay, now the other big thing that happened is that Tesla is killing the Model S and the Model X. So these two cars, especially the Model S, legendary vehicle, is what you sort of took Tesla from niche. Nobody thought that they could do anything as an EV company, and it completely transformed the brand. What people thought was possible with electric vehicles. The X is this insane project that, Elon's way over ambitious, maybe probably too cocky sort of like vibe, gave birth to this unbelievable vehicle. Well, guess what? They're both being discontinued as of the second quarter of this year. And the reason why is because they want to take that factory, that Fremont factory where these are being built, and transform it for humanoid robots. And of course, if you're not familiar, these are the robots that Tesla has been working on for the last couple of years, where they want to have it basically do whatever a human can in the physical world. And they're going to use the same computer and the same sort of AI process to power this robot as they do the cars. And I fully expected this to happen. I made a post back in 2023 where I was sort of talking about, hey, if you think about the amount of square footage in Fremont that is assigned to the S and X, and they're making no more than 50,000 of these per year, okay, which is less than, it's like a single digit % of how many cars Tesla makes per year. You have all that factory space that's being assigned to a product that is barely being sold, okay? And so now that you're working on things like the Cybercab, which I'll get to, and the humanoid robot, the amount of square footage in that factory that is being used for a product that's basically doing nothing for your business. It would be much better if you use that square footage for something that's actually doing something for your business with the AI business. And so this is Tesla saying, yes, we are doing that. And so the signal is that Tesla is now going all in into this truly AI future by investing heavily on not just self-driving cars, but also these humanoid robots. They already have a line being built they have a trial line in California, they're building one in Texas. Tesla says it's going to be able to make, somewhere between 1 million to 10 million at full scale. Of course, this is Elon talking, right? So we have to, temper our expectations a little bit. But they are eventually successful in doing what they say they're going to do. So we have to take them at their word. And they're going to be investing a lot of money into these lines to get them up and running to make these robots, which I'm going to talk about here in a second. And so I would not be surprised whatsoever if perhaps not 2026, but 2027, definitely by 2028, we start seeing these humanoid robots being purchased by businesses and Tesla using them internally. I don't think they're going to make it to the home yet. I think the home there's a lot I can just imagine having a humanoid robot in my house, and then God forbid something happens and my kids running around or my pets are running around and the robot sort of trips and falls on one of them. Forget it. And Tesla doesn't want that. Tesla does not want that. They only want that. They only want to expose themselves to that liability if the safety of that humanoid is 100%. And the only way to get there is by collecting a lot of data and being exposed to a lot of different sort of scenarios, okay? And so I don't see that happening anytime soon, but I can definitely see that happening in businesses where you have very controlled environments. You go to a factory, you can sort of separate the humanoid from the human. You have all these forklifts running around in factories and warehouses as an example. You have all these, crazy robots at like manufacturing lines that do stuff. Those are separated for the humans so that it doesn't kill them. So the humanoid is going to be very something similar, not as a big scale, but it'll be more sort of defined as like, hey, let the humanoid work here. Maybe you guys can meet up here and sort of help each other out. But it's going to be much easier to create separation. And then as they collect data and the robot gets better, then they'll start selling it to the home. Now, of course, all of these projects, sort of this self-driving Cybercab that I'll talk about, the humanoid robot, the sort of redoing Fremont, Tesla wants to expand their vehicle production to 5 million by 2028. They want to build chips, which I'll also talk about. All of that takes a ton of money. And so Tesla is committing $20 billion in CapEx, which is capital expenditures. Basically, the simple way of saying it is that they are reinvesting the money they are making back into the business to build the next things that they want to sell. So $20 billion worth of that. And the reality is that if they want to achieve this amazing abundance mission that the company has, which is essentially cheap robots and cheap self-driving cars everywhere for anybody to use, that's super accessible, and it lifts the floor up for everybody to have access to unbelievable products and services, that's their mission. You can only do that if you invest in it. And so this is yet another signal that says Tesla's very serious about creating this new AI future and making it real. Which is why, sort of, if I go back to the beginning, this is why I think a lot of people might be missing the Tesla story and this whole AI story. You know, we're thinking about NVIDIA and OpenAI and Claude and all this stuff. Well, guess what? Tesla is doing the same exact thing in the physical world. They're the physical world AI company that's creating this new reality that OpenAI made, as an example, and NVIDIA is enabling. And ClaudeBot, or Moltbot now it's called, these agents that are just transforming the way that people work and the interface with things, Tesla's doing in the physical world. Now, that whole CapEx equation, it's also going into the Cybercab. The Cybercab is Tesla's new self-driving platform without a steering wheel and pedal. That's going to also eat up some of that money. And Tesla is going to start the production of that car in April. But this CapEx commitment and everything that Tesla has been talking about, there are things that in the earnings call, Elon specifically said that they're going all in with the Cybercab to be a fully driverless vehicle. But if I just think about the entire picture, the amount of money they have to reallocate from their cash flow for the money they make back into the investment of the company, the fact that they're going to be also building out factories for Optimus and factories for chips, which I'll talk about. All of these things require unbelievable commitments. And the only way to make that a reality without taking out huge amounts of debt or raising capital in the markets by diluting stockholders, basically you create stock out of thin air, you sell it to the public, which means that every stockholder's shares then go down because you're just increasing supply. It's basically inflation. It's inflation for stockholders. If you want to avoid that at all costs, because all of a sudden you're diluting your business value. You would rather just have the dollars coming from your business to fund that growth. And this is something that Tesla always talks about, being extremely capital efficient. The huge problem with the Cybercab, the huge problem is that they are highly dependent on regulations to catch up with their technical ability. It's very obvious that Tesla can and will do unsupervised self-driving, a robotaxi, fully self-driving car with their current AI system with just the cameras and the AI chip. It is obvious as water is blue. Like, is it blue? It's as obvious as the sky is blue, okay? They're gonna get there, but I am still not sold at all that the regulatory environment will allow Tesla to operate their lines at full tilt so that they're able to sell all those Cybercabs. And this call has reinforced that for me. It really has. Regardless of how Elon or Tesla are painting sort of this picture of Cybercab cannot operate without a steering wheel and pedal, even though later in the call, they literally said that, you know, if they didn't have, let's say, chips to operate the car as a self-driving car, they can just add steering wheels and pedals back in. So that's a fundamental thing that they've built into the car to ensure that there's a fallback mechanism in case something doesn't work out for them to be able to operate as a self-driving car. And so what I'm positing is that the regulatory environment is not going to allow Tesla to do that. It's just not. The United States were waiting for the federal government to raise the cap of vehicles that can be sold without a steering wheel and pedal from 2,500 or whatever the number is to 95,000. Tesla wants to get to at least 2 million units capacity per year for the Cybercab. If that passes and Tesla can now make 95,000 cars without steering wheels and pedals, they're still capped. That's at full tilt at the 2 million units per year. That's only 10 weeks production. What are they going to do with the other 40 weeks of production for that year? Basically, what I'm trying to say is that they're going to be hamstrung by 80% if they're hoping that the regulations catch up to what they are. They're going to be artificially capped just to 20% of what they can do if the proposed solutions pass from regulations. And so to me, it is without a doubt that Tesla will either use the same exact form factor or slightly modify the line that they're building for the Cybercab. They are going to have to put in steering wheels and pedals, because the problem is, if you want to get to 2 million units per year of Cybercab, you have to send a signal to your supply chain, to your suppliers, the people that make the steel, the people that help you make the drivetrains, the raw materials, all the trim pieces, everything. Your suppliers need to have confidence that you are going to build those cars. And then if Tesla is building those cars, but regulators are saying you can't put them anywhere, Tesla is stuck with billions and tens of billions of stock in their factories or in parking lots or in garages or whatever, doing nothing. And that's the last thing Tesla wants, especially when they're making so many huge investments and CapEx commitments for humanoid robots and batteries and solar panels and next generation products and whatever they're making and their chips. Just think about this for a second. They are relying on the regulators to allow them to sell Cybercab at full tilt. And that, if they do that, they will reduce the amount of money that they need to invest in their biggest bottleneck for the next 3 years, which is chips. This makes no sense to me whatsoever. People in the Tesla community keep thinking, they think that I'm joking. I'm not joking. This is as obvious as it gets. And if I'm wrong, then I will be the happiest person alive, because this means that Tesla is able to navigate extremely difficult regulatory environments very easily, but I just don't think that's going to happen. I think that's unrealistic. So in my opinion, Tesla's going to have one of the craziest misdirection product unveils of all time, where all of a sudden they're going to start selling a smaller vehicle, whatever you want to call this new form factor, with a steering wheel and pedal that people had no idea was coming. And I think that's going to set the freaking internet ablaze, because this thing's going to be sold out for probably years, okay? Because it's going to be able to drive itself without you having to pay attention, but it'll have a steering wheel and pedal. And another thing, Tesla can't say that they're making this, because if they say they can make that, the Model 3 and the Model Y sales will go down, because people are going to want to buy that car, right? Which will reduce the amount of money Tesla can make to fund the growth of the company, okay? All right, I'm going to get off this train now. Then the other big investment that Tesla's making, talking about investments, is X.ai. X.ai is the company that makes Grok. It's basically Elon Musk's OpenAI competitor, ChatGPT competitor. And now Tesla is taking a $2 billion stake in the company. So now by default, every Tesla shareholder has a little slice of X.ai, which actually makes a ton of sense, because long-term, what X.ai is going to allow Tesla to do is to leverage their compute. So all the chips that X.ai is buying for artificial intelligence, Tesla will, I'm assuming, have access to train their own models. So for the humanoid robot and for the car. But they're also going to have the ability to use Grok, which is the OpenAI version of X.ai, the ChatGPT version. As that gets better, the assistant that's already in Tesla cars, the Grok button that you can hold by holding the voice button, and now you have like an AI assistant. You basically have a voice AI assistant in your car that can sort of do navigation for you, and I'm assuming over time other stuff. As that gets better, then the car's ability gets better. And so that obviously long-term is a huge play, because that's going to create even more separation between what Tesla's building as a transportation company, but they're not really a transportation company. They're a robot company that is empowered by AI, not just in the physical world, but in the digital world with things like Grok, with things like X.ai. So that investment makes perfect sense. I'm a Tesla investor. I say invest more, honestly, but they probably can't, because they want to take a lot of that cash and dump it into growing out, their humanoid robots and all that other stuff. And then along the lines of AI and chips, a lot of different warnings from Elon Musk about the geopolitical situation that could be arising here in the next few years related to AI. He had a quote in the call that he said, he thinks a lot of businesses are underrating just how big of a deal this is. And that to me feels like a pretty substantial warning to the market that says, hey, we're probably going to go down a path that if you're not isolating yourself and you're not ensuring that the supply chain for your business is isolated and just there for you to be able to leverage, meaning you're not depending on other countries to give you things like chips and raw materials, you're going to have a big problem, because the assumption here is that countries like China, which control a lot of the materials and the supply chain for things like cars and heavy machinery and chips, and if they invade Taiwan, let's say, which Taiwan makes something like 60 to 80% of all the chips in the world, that the risk of that happening is getting bigger and bigger as the United States is becoming a little bit more isolated. We're seeing this reshaping of the world order. I don't think that's a secret to anybody. But as that happens, countries will use the things that they own as a country that we're selling to other countries to make stuff, they can use that as leverage to make the other country weaker. And in this case, China has a lot of leverage in the United States from a raw materials perspective, rare earth metals, but also the ability to hamstring America's ability to produce chips if they were to invade Taiwan, as an example. The United States just, freaking threw out Maduro in Venezuela. What does Venezuela do for Iran? They make drones, okay? Iran has a lot of their drone freaking factories in Venezuela. So it's kind of like that, but for chips. And so what Tesla wants to do is they want to isolate and own their entire supply chain to ensure that if this were to happen, they're not going to be stuck not making robots and cars, because those robots and cars can't drive themselves, and the robots can't operate and do anything unless they have a brain. And the chip is the brain. Okay, so this becomes a huge, huge, huge bottleneck for the company if they don't have the ability to isolate themselves from these things happening. And the only way to do that is by building their own capacity here in the United States, which again, takes a lot of money. And along those lines, Tesla and Elon were very, very open about how this AI5, AI6 chip that's going to power their car and their humanoid robots is becoming the biggest bottleneck for the company long term. It's where Elon's spending most of his time solving on a new chip design, this AI5, and making it as good as possible. And again, this is another signal that says Tesla's very serious about becoming not just literally an AI company, because they're solving for the most important piece of the puzzle, which is chips. And what it sounds like to me is that Tesla long term is going to be probably one of the biggest manufacturers of inference chips in the world. The inference chip is the chip that AI products use to create the results. So like when you go to ChatGPT and you type something and it gives you a result back, that was inference compute. That's the chip that's giving you the result. That chip has been trained with a training compute cluster that uses different chips to train the model, and then the training gives the data to the inference chip, and then the inference chip uses the training model to give you answers based on what you ask it. And that process is the same exact thing in the physical world than it is in the digital world. And if you're an AI company, that piece, figuring out how to actually do things, that inference, is the most important part of all. And so I'm very curious to see if analysts on Wall Street truly start sort of reshaping how they're thinking about this company. It's not a car company. Very obviously, it's not a car company. This is very obviously a robot company. It's a physical world AI company. They're going to have a recurring revenue model with FSD. So as FSD subscriptions go up and the fleet gets bigger, more AI money is going to come in. The humanoid robot's going to go live. That's going to be 100% AI, right? Because it's a brand new product line that doesn't exist without AI. So that's going to be a ton of AI revenue. So the company has to be thought of as an AI company. And so what's going to be interesting to see is as Tesla reinvests this money into CapEx and building out the business long term, and their revenue starts to go up with their AI business, very curious to see how Wall Street treats that revenue. What's the multiple they're going to put on, say, $1 billion of AI revenue that's recurring per year, or 10 billion, or 100 billion as the humanoid robot and FSD sort of proliferate all over the world. Like they become very commonplace. And so that's the key to look out for with this company. Tesla is an AI company. It's very obviously an AI company. Now the question becomes, how quickly can they get that FSD subscription rate up? How quickly can they get robotaxi going? And how quickly can they get the humanoid robot real so it can actually generate revenue? And how quickly can they solve their chip bottleneck that's coming down the pike? And how quickly can they isolate themselves from geopolitical risk? That's it. That's all they gotta do. Oh, but wait, before you go. I'm coming out with a new book. Yeah, my first book ever, Abundance or Collapse. I talk about this AI transition very deeply. What are the things you should look out for? And one of the things that I think is missing out in the world is there's a lot of AI hype and a lot of AI doom. I'm trying to be very balanced about the wins and the losses, but more importantly, I want to give a guidebook for people to prepare themselves for the transition. So at least they're equipped with the proper knowledge and the proper actions to be able to come out on the other side of this transition on the right side, not the wrong side. Because I do think there's a risk for a lot of people to be displaced and a lot of people to be left behind if they are not aware of how to actually transition. So that's what this book is about. You can pre-order it. It comes out on February 14th on Amazon, should be worldwide, paperback, hardcover, and Kindle. Super excited. Let me know what you think if you do order it, and I thank you very much for your support. Okay, bye. See ya. Goodbye.